Actually, it should be seen till the shoulder. Actually, your shoulders are getting covered. Better. Yes.
Able to see the screens, right?
I'm yeah, it's moving. Yes, yes, perfectly visible. Okay, Ali is managing. ठीक. Yeah, Ratish, we are going live. We are ready. Yeah. So good morning, dear partners, colleagues, and team Sundaram. Thank you for sparing time on Saturday morning for this valuable interaction. We have a very special speaker with us today, Mr. Ratish Warrior. We are privileged to have you on this platform and thank you in advance for sharing your insights on your NFO. Ratish is a fund manager, equity at Sundaram Asset Management Company. He has 18 years of experience in financial services with 16 years in equity fund management. Ratish had joined Sundaram Asset Management Company in November 2018. He was initially a part of a Sundaram alternate business where he managed small and micro caps under the PMS vertical and a nano cap AIF and some advisory mandates. He moved back to Sundaram Asset Management Company in June 2020. Prior to joining Sundaram, he was a part of a core team at Mahindra Asset Management, Reliance Life Insurance Company Limited, and managing equity across the cap curves and ICAP Limited. He manages Sundaram Dividend Yield Fund, Sundaram Consumption Fund, Sundaram Midcap Fund, Sundaram Multicap Fund, and Sundaram Infrastructure Advantage Fund. He's basically a BCom graduate and holds an MBA in finance. He also had done a post-graduation in investment analysis at Certified Portfolio Manager. So very warm welcome to you, Ratish, once again, and over to you. Thank you, Ratish.
Yeah, thanks, Disha. So I'll quickly talk about the new fund which we are launching from 5th, the Sundaram Business Cycle Fund. Hope I'm audible.
Yes, you're audible.
So I'll take 20-25 minutes, just talk about the fund, and then after that, I'll be happy to take questions on this. So we are launching the Sundaram Business Cycle Fund. So if you look at Sundaram Business Cycle Fund, if you look at Sundaram Business Cycle Fund, we are looking at investing in businesses which will be driven by medium to long-term themes, as opposed to what generally people call in the business cycle investing in sector cycles. So if you look at individual businesses or sectors, they go through their own cycles from early growth, maturity, and a decline phase. In that, over the last 20 or 30 years of global history, you're seeing either cycles are very short or very long in duration. In taking those sectorial bets, you have to generally have, we have to be very tactful, and we have to keep churning based on where sector you're seeing opportunities in the near term, as and when they are in the early growth or declining phase, right? So that becomes not an appropriate framework. So we decided that we'll invest in businesses driven by these medium and long-term macro themes, right? Which creates its own cycles. And we are going to invest in these businesses which will take advantage of these cycles. Now, if you look at the themes or trends are driven by multiple factors. So in India, if you look at two or three, four major factors which influence these cycles or trends currently are demographics, If you look at demographics, even 20 years back, today for the next 15, 20 years, it's in a very favorable zone. If you look at technology, both India, globally, there is a technology transition keeps happening across sectors, across segments, and can we identify businesses which take advantage of these technology transition which happens? Then there is another theme which plays out when we talk about self-reliance. It's not only happening in India, it happens globally, where period to period, depending upon the geopolitical situation. So for example, in the last 3-4 years, you see whether it is COVID or various geopolitical scenario happening in Europe, Middle East, etc. You're looking at not only in India, a lot of other companies, they are looking at being indigenized and looking at can they be kind of an Atmanirbhar, right? We call it Atmanirbhar. A lot of people talk about import substitution. So these trends or factors, they drive long-term business cycles. We are trying to capture these cycles in the fund by investing in businesses which will take advantage of this, right? This is what this fund definition is all about. Now, to give you some examples of the factors which I mentioned globally, which is relevant, like let's look at even demographics. Today, there will be reverse demographic advantage for countries like Japan, etc. But that is also a trend which a lot of businesses try to capture the reversal of the demographics, right? In India, it's the other way. Similarly, if you look at premiumization as a theme, both India globally, there is a underlining factor, irrespective of all these factors, what we are mentioning, whether it is premiumization, whether it is demographics, technology, etc., which I mentioned in my earlier slide, irrespective of the geopolitical environment, irrespective of government policies. Obviously, government policies add in, gives an added framework or an advantage. But outside of that, these underlying factors or trends, they create long-term cycles, right? Those cycles is what creates long-term profit pool opportunities, and can businesses take advantage of that? And those businesses can we invest is what the pure definition again for the business cycle fund, what we are going to launch. So even if you look at historical global examples, whether you look at last 50-60 years, whether it is US, where they wanted to become a global giant. So you saw that between 1960s and 70s, a lot of large companies emerged where they took advantage of this factor of going global, right? And you saw substantial amount of high growth phase for those companies. Similarly, if you look at last 20 years, the clean one factor between 2000 and 2010 was Chinese Olympics, which led to large manufacturing boom in China, which led to significant amount of hyper growth in the commodity cycle globally. And you saw not only China, a lot of other countries getting benefited by that upcycle in commodities, where a lot of countries, including India, they increase their capex from incremental adding more capacities in different commodities. Similarly, you saw in last 10 to 15 years, another factor which led to long-term cycle. If you look at technology, which created a different world altogether, where you're talking about social media, cloud registration, whether even in our daily lives, we use it more than what for anything else. The time we spend on a daily basis, we use it on these platforms, whether it is a Facebook, Microsoft, Google, etc. These have also created this underlining factor of innovation and technology transition. And what I mentioned about in the advent of social media, etc., this has created again a medium-term cycle which is still running, and these companies are able to utilize that as an opportunity and create that long-term sustainable business models, create positive and free cash flows, and reinvest in creating further innovations. For example, you have seen lately AI, etc. By these companies only, they have innovated such kind of technologies, right? So what we are trying to say again, globally also these themes, trends become more relevant, where companies are able to take advantage of the cycles which have been created because of these underlying trends or themes. India, if you look at historical examples between 2005 and 20, still it is relevant. The entire gamut of consumer lending, which started from 2005. So individuals, whether it is you and me, anything we wanted to buy, which is highly capital, which is high capex, whether it is a housing, whether it is any consumer durable product, etc. 15, 20 years back, that kind of financial tool was not available. Post Lehman crisis, because of various government policies, because of companies penetrating their their branches in terms of further branch additions or introducing new products, etc., you saw an explosion in this industry from a compounding multi-year growth, whether it is home loan companies, whether it is affordable housing, whether it is consumer loans, personal loans, gold loans, etc. And you saw that consistent even today. There has been structural shift happening towards retail lending, and because of underlying demographic profile, etc., the growth still continues. This is again to do with two underlying trends. One is the requirement of the financing, and second, the young demographic profile what India has, right? And the under-penetration story. All the culmination of three factors have created a long-term cycles, and businesses have taken advantage of that. Similarly, look at paint industry over the previous decade, the kind of market cap it got created, whether it listed players, large listed players. Again, the underlying factor here was formalization. That industry went through two changes there, where the decorative paint industry, the growth rates, because of the nuclearization, etc. concept, more houses getting created. So the decorative paint category within the paint saw an explosion in terms of growth. And second, because a lot of spending happened in-house, that spending went into more brands and those brands got created. That is how a lot of formalization happened in this industry. And that was a decadal trend. And a lot of companies, businesses took advantage of this profit pool opportunities. This is what we are trying to capture here in this fund. Can we capture themes which are relevant from a medium-term perspective? Can we identify businesses which will take advantage of the themes from a profit pool and free cash flow opportunity? 4 themes today we find are relevant from sustainability perspective or visibility perspective. The first theme we are talking about is Make in India or Make for India. So this is not only in India, globally it is becoming true when we look at import substitution, Atmanirbhar, however different words you want to call it. It is a culmination of 3 factors, especially for India, which is getting favorable. The first thing is realignment of global supply chain. So post-COVID and geopolitical, which has been happening over the last decade, a lot of global large OEMs are looking at one more destination from a manufacturing per se, which India, because of the favorable demographic profile and the cost advantage, is one preferred destination. Second, include because of this realignment of supply chain and disruption, what you saw, every country is looking at incrementally focusing more on import substitution. So you saw large policy implementations, not only in India and globally, and that is benefiting a lot of businesses who are taking advantage of that from an import substitution per se. And this is cut across sectors, whether it is automobile industry, whether it is IT industry, medical equipment industry, food processing industry, across sectors, you see this whether through government policies or whether to bring in more efficiencies. You're seeing import substitution playing out, and also companies who are able to participate in the global supply chain because of their inherent capabilities, what they build from an efficiency angle, right? And this plays across sectors, as I mentioned. So this is one theme which has, again, long-term sustainability from a value creation perspective. The second theme, it's a known theme from a consumer perspective. The underlying factor here is the young population who are looking at more value creation from more employment opportunities or income generating opportunities, or second, they are looking at moving up the value chain from a per capita income or from a consumption perspective. So that creates an underlying trend for 3 themes, whether it is urbanization, premiumization, or formalization. When we talk about urbanization, if you look at last decade and the coming decade, you will find a lot of new cities emerging because of want of income creation for these young individuals, and also a lot of businesses taking advantage of putting up their either manufacturing outlets or different branches network, etc., across these tier 2, tier 3 cities. So that is creating a new set of consumers, which people can capture. And again, this is cut across sectors. If you see on the right hand side, whether it is food, grocery, whether it is consumer durables, whether it is footwear, whether it is jewelry, whether it is furniture, garment, every industry, it's cut across, where you see suddenly urbanization playing out, where new consumers are coming up and the aspirations are getting met. by companies opening up their new branches or co-locations, etc. Similarly, because of these new consumers coming up, you have seen premiumization as a theme playing out. Again, the underlying trend of demographic and their aspiration of going up the value chain from a consumption perspective. You have seen that in automobile industry, for example, whether it is your two-wheeler or whether it is your four-wheeler, how even though underlying industry growth is equivalent to a real GDP number, but because of the premiumization trend, the underlying premium categories, you're seeing a compounded multi-year growth stories because of the aspirational requirements of a lot of these young consumers who are coming up with incremental wealth creation, which they are doing because of more income generation they are having. Similarly, if you see, because of culmination of young consumer and their income profile going up across industries, you're seeing a consolidation happening backed by favorable policies, whether it is GST, RERA, a lot of policies have come through over the last 10-15 years, specifically in India, which have helped lot of industry to go through formalization or consolidation. If you see this chart, whether it is lending business, whether it is cement commodity business like cement, steel, whether it is multiplex, etc., you have seen a compounded growth rate shifting towards more organized players or listed players. They getting benefited because the young consumer want branded goods and premium goods, and these businesses are able to take advantage of this. This is where all the three, whether it is urbanization, premiumization, or formalization, companies are able to capture the incremental profit pool creation and reinvest that businesses to continue to capture to these advantages backed by favorable policies. So this is the second theme which we are very confident on, from identifying businesses who can take advantage of this. Talking about third theme quickly, we are talking about sustainability here. So the sustainability factor, if you look at the CO2 levels, not only now since 1980, whether it is India or globally, is been rising. We ourselves as individuals are facing this from an incremental heat perspective. But here again, the underlying trend is not only high CO2 levels, it is again culmination of three factors. The second factor is companies want to go carbon neutral, and third, the cost of conversion has come down significantly. So if you look at whether it is, people talk about an alternative fuel for mobility, people talk about an alternative fuel for energy consumption, etc. The cost of whether it is a solar PV systems, whether it is a battery, etc., has come down significantly over the last 3-4 years. It has the cost efficiencies are built in, and now at a cost level they are similar with the traditional businesses which create these kind of verticals. So there is a push both from a policy level, both from a cost level, and third, a requirement of becoming carbon neutral. A culmination of three factors are enabling the transition to happen to become more sustainable. And this again, it plays across sectors, across companies sectors, whether it is mobility, as I said, automobile industry, or whether it is energy, even including recycling. Because of new technology transition is happening across sectors, you're finding recycling opportunities to become more carbon neutral. And as I said, it's playing across sectors, whether it is chemicals, pharma, automobile, I explained to you, energy, I explained to you, those all companies. Here are also two types of companies there. One is who is moving towards carbon neutral, and second, companies who are enabling them to move towards carbon neutral. These kind of companies opportunities are here from an 8 to 10-year perspective, from a value creation and profit pool creation opportunity. Talking about the final fourth theme, here again, technology transition through digitization. So if you look at the clear factor here is the access to internet and the cost of utilizing that internet. If you look at today in India, 81 crore people have access to internet, and the cost of utilizing that internet today is is become a necessity, and the cost is equivalent to for any other basic good. And that is what a lot of businesses are taking advantage. That is what you're seeing disruption happening through digitization, whether it is B2C platforms or B2B platforms, either in the beauty space, grocery space, food space, electronic space, mobile space, etc. New verticals are getting created, or parallel verticals are getting created. Either it is disrupting the existing businesses, or existing businesses are creating one more vertical so that they can take advantage of the digitization. This again plays across sectors. whether it is advertising, whether it is logistics, whether it is online B2B platforms, online B2C platforms, playing across sectors, a visibility of 7-9 years from this digitalization, monetization opportunity, because the underlying trend of access and the cost of that access, right? Both culmination is driving long-term trends here where companies can take advantage. So quickly to talk about final two slides. Sundaram business cycle is trying to take advantage of these medium-term trends, which creates these long-term cycles, and companies who can take advantage of this at the inflection point, either moving towards these emerging trends or companies who are enabling these businesses to take advantage of these trends. These kind of businesses, what we look at from a medium-term profit and value creation opportunity. So to put it at last, portfolio will be sector agnostic, capco agnostic, will be equally invested in these themes where and as and when we find value creation or profit pool creation opportunities. It will be sector agnostic, capco agnostic, as I said, and we will have a concentrated portfolio, identifying businesses, 30 to 40 businesses who can take advantage of these 4-5 trends. And one most important thing here is this will be dynamically managed. When I say dynamically managed is today these 4-5 themes which I highlighted, whether it is manufacturing, make in India, make for India, whether it is sustainability, whether it is digitization, whether it is urbanization, premiumization or consolidation, these are the opportunities which are relevant today. But as and when these themes play out and the profit pool creation opportunity normalizes, we will move to another theme which that point of time becomes relevant. So we are calling this kind of a dynamic thematic approach, cutting across sectors, where we are trying to identify cycles which will have that medium term profit pool creation opportunities, and can we invest in focused businesses, 30 to 40 businesses which can take advantage of these themes, right? So I think I'll end here, Disha, and happy to take any questions. Thanks.
Yeah, thank you, Ritesh, for the wonderful presentation. It was very precise, up to the point, and so insightful presentation. So I'm sure all our partners are having their takeaways from this presentation, and I'm sure they will be easily position this product now in the market. So thank you for the insightful presentation. Let's take the Q&A now. I have found few questions from partners end, so I'll just put it on screen. Just a minute. Yeah, so is it visible on the screen? So for everybody's convenience, I'll just read out the question. So which part of the business cycle would be optimal to invest in these stocks?
Yeah, so which part of the business cycle would be optimal to invest in these stocks? If I got this question right, they're asking how will the portfolio positioning be, right?
Perfect.
So if you look at, as I said in my alluded in my presentation, so we are looking at identifying trends, right, which will create that long-term visibility from a profit pool and value creation opportunity. And because of these trends, there are businesses which are getting that benefit. Either they are shifting their business model to these new themes. Like, for example, I give you a previous decade example of consumer lending. There are a lot of lending platforms who were purely doing their lending towards agri, large scale capex businesses, but they slowly moved their business models towards even consumer lending, and that helped them to create that long-term sustainability. Or we are looking at businesses which will help them or optimally benefit them towards moving to these themes, trends, right? So these kind of companies which we'll invest in, we will take advantage of these cycles, right? So, and it will invest in all the 4-5 themes which I alluded to. So what proportion we'll be investing in these themes will depend upon what is a near-term or medium-term opportunity we have from a profit pool and value creation or a free cash flow opportunity perspective, right? So it will depend upon where is the positioning today, but it will invest in all the 4-5 themes majorly in what we have discussed today, and keep moving dynamically to as and when new themes become relevant and these existing themes which I spoke about, the growth normalizes that, please.
Okay. Thank you for addressing the answer. Moving to the next question. So is this a right time to enter in this theme post-election, as market is highly fluctuated?
So if you look at a couple of things I mentioned in my earlier, so we are trying to identify, trends, factors these factors are not only, so one of the enabling factors is obviously government policies, but outside of government policies these are enabling trends. Let's look at one of the themes which we mentioned about manufacturing, right? This is led by a couple of underlining factors, whether realignment of global supply chains. A lot of global companies are looking as one more country as a destination. That is where countries like India is getting benefited. Second, a young demographic profile. Is such where versus globally, both from a knowledge perspective or cost perspective, we are in a better situation compared to any other country globally. So if you look at, we had a lot of other competing countries from a cost perspective previous decade, but because their demographic profile, etc., is plateauing out, India is in a much favorable destination. So these two culmination is creating a framework of more income generation requirement for this young population, and government policies are moving towards this, right? So irrespective of governments, or irrespective of pre-elections or post-elections, these nudging policy initiatives will continue, because that will help incremental income generations for the young population, large population what we have, right? So whether it is a right time today, yes, it's the right time. So because uncertainty of election decision, etc., now it's away. Irrespective of what is the election outcome, the continuity of policies will come, because if you see historically also last 20-30 years, irrespective of government change, etc., good policies continued, whether it is a Manrega, whether it is telecom reforms, etc., in spite of change in the governments, right? So these good policy practices will continue, because at the end it benefits the young, the end citizens. So as the uncertainty of the decision making is over, I think that becomes right time to look at the themes from a medium term perspective, please.
Thank you, Ritesh, once again for precisely mentioning all the points. So yeah, moving to the third question. So is there any chances of recession in the business cycle? What if unemployment rises? Does it affect this segment?
So as I said, we are not looking at one particular factor, etc., right? So when we talk about recession, I gave you an example of consumer lending as a emerging trend over the previous decade. If you look at the previous decade, average growth rates were 5.5-6%, if I'm not wrong, the real GDP number. And if you look at, there was cycles both from separate governments between 2009 and 14-19, and you saw cycles of different inflation, interest rate environment, and employment index fluctuations. In spite of that, the trend continued from that long-term perspective of that consumer lending rate. In this fund, precisely, we are trying to capture or identify these trends which have a medium-term visibility, which because of particular factor of unemployment or recession will have a limited impact, because these are underlying trend where either because of a technology transition or because of a young demographic advantage, or third I mentioned about sustainability, which is not only happening in India, globally, etc., that will play out. So near term, whatever these negative trends are there, that will create as opportunity, for example, for us to invest, because it's an NFO. We have a certain time frame to invest. So we'll utilize these opportunities fully, whatever time period is there, to invest in businesses as and when there is an opportunity, please.
Yes, precisely. Thank you. So fourth question, which category of investor should be investing in business cycle funds? Is it a passive or an active investors?
So if you look at the fund definition, what we are mentioning, it is kind of we are calling it a dynamic thematic fund, and it is a concentrated, focused portfolio towards 4 or 5 themes. So it's actively managed. Second, if you look at which type of investor, if you look at investors generally have allocation to the core products, whether it is large cap, mid cap, small caps, flexi caps, large and mid cap, multi cap, etc. Multiple core categories are there, but also people invest in thematic funds. Now, when they look at thematic funds, they are not sure which themes they want to invest in, because a lot of thematic funds focus on one individual theme or factor or trend. Here we are trying to say that we will take the onus of identifying which are themes and not one theme, diversified thematic in terms of approach from our 4 or 5 themes which are relevant today, and dynamically keep moving to another themes from a diversified perspective as and when this become relevant, right? So this is ideal for investors who are looking at thematic funds allocation, because this is a single window. You're getting multiple themes to play dynamically.
Correct. Thank you. Moving to next. Does the impact of market concentration on the likelihood of bank default depends on the business cycle? Because actually, as far as my understanding is concerned on this question, on the election day, people were keen to buy PSU banks actually, because all the PSU were down that point of time. So is the concentration more on the banking end?
So I mentioned about certain trends, right? So in that
Yes.
it plays across sectors. So including financial services will be a segment which will capture those trends, right? Which is demographics or the underlying themes which I mentioned, whether it is manufacturing or, whether I mentioned about urbanization, premiumization, or consolidation. In that one slide, I mentioned how banking credit is becoming more consolidated, etc. So that theme will be played out. But if you look at the specific question of bank default, etc., if you look at a normal sector growth or an individual company growth, they go through that cycle of early growth, high growth, plateauing out or stagnant, and the decline, right? That declining phase you saw, for example, in the previous decade, and your question precisely on that PSU banks, etc., they had that impact because a lot of their dependence was on corporate loans, etc. And you saw that cycle reversing for those PSU banks because the cycle reversed for the businesses on to which they lend. That cycle now has reversed. That is why you're seeing last 3-4 years sustainability for that PSU. But in this fund, to be precisely, we are not looking at sectorial cycles, as I mentioned. We are looking at trends. Either it's technology, demographics, sustainability, etc. Can we capture those from a medium-term perspective, right? So cycles are more medium-term and long-term. And as that cycles play out, we'll move to another theme which is relevant, please.
Yes, thank you. Moving to next. So earning management through business cycle is possible?
I don't understand this question. I'll answer this from a growth perspective. So in this cycle fund, what we are trying to capture is, we are trying to capture medium-term visibility from high growth perspective. So these underlying trends give companies the opportunity to have a high growth visibility because of the underlying trend, right? So we are trying to capture businesses in this fund precisely where there is high growth opportunity, and as that high growth opportunity plays out, we will dynamically move to another company as and when we find high growth, right? So precisely to answer this earnings question, in this business cycle fund, we are looking at businesses where there is high growth opportunities, please.
Okay, I think this question you have covered, but just for the sake of addressing it to our audience, is globalization leading to the integration of business cycle? I think you have covered in Make in India slide, but just touch upon a bit for the same.
So this globalization or deglobalization, both will play out. Like manufacturing, Make in India, Make for India, I mentioned it's deglobalization. Every country, not only in India, they are looking at more of import substitution. Last 2-3 weeks, you're hearing a lot of tariffs from US, etc. for Chinese companies. So indirectly, everybody, whether it is a large country like US or whether it is countries like India, they all are looking at self security or import substitution, right? So deglobalization is playing out. The other way, a lot of theme trends I mentioned, it's globalized trends, whether it is sustainability, for example, it's not only in India. Globally, people are working towards sustainable living, whether it is clean energy, whether it is, the mobility space. That is why the cost is getting realigned from a beneficial perspective for Indian companies. That is why the trend is positive for India, because the cost is also getting realigned because it's globally applicable. So here in this, we are trying to identify themes both from a trend of globalization, and one theme is clearly playing out the opposite of globalization, which is deglobalization, right? So these themes are getting captured by whatever the underlying factors are relevant.
So yes, with this we are concluding our Q&A session. So thank you, Ritesh, once again for joining us on the Saturday morning, and thank you for such a lovely and insightful presentation on business cycle NFO. And thank you to all our partners for joining in on time, and thank you for your invaluable support in the same. So yes, thanks Ritesh once again.
Thank you.
Yes. So we are concluding the session with this. Thank you.